Good morning, traders, and welcome back to the channel after yesterday's bloodshed on the markets. You are looking at our 1 hour chart on the DAX. The US markets are obviously affecting quite a bit on the DAX, naturally. Yesterday, the S&P 500 completed a 7% correction altogether. But to everyone, I want to tell you that every 2 years happens a 10% correction, and roughly 5 to 7, like every 6 years, we see a 25% correction, and the S&P 500 has now corrected 7%. The PCA research has stated already Sunday, Monday that US recession is inevitable. So whatever is happening, we are just on the verge of the events starting. But to look at DAX on our charts, we are still on the daily chart, because we need this now. We are on the highly overbought level, and the indicators are drawing downwards after yesterday's market correction. We're watching these levels on the DAX, 22,200 between 23,432. We don't trade on the daily level. There's just no chance in this kind of market conditions that you would stay in your position, not even overnight, let alone over a week. Especially if you are leveraged like I am, you do not stay positions more than intraday perspective. Let's drop down to hourly chart on the DAX. This was yesterday. Yesterday morning pre-market, as when we were speaking, and then all day we wrote down, but much softer than the S&P, like you can see here how the S&P went in the pre-market until the open at 4:30 European, 8:30 New York. The downward momentum was much stronger. On the 15-minute and 5-minute levels, we can clearly see the yesterday's action bounced here, oversold levels downward with the other world indices. Today, by the way, Tuesday, March 11th, the NFIB Optimism Index will be, and it's out around noon Europe, and job openings will be 10 a.m. New York. It's expected 7.6 million job openings. So expect some volatility today, but tomorrow is a big one. Consumer price index and CPI year over year, and the core CPI on New York open. So this is a very good week to stay on the markets, but you gotta be intraday. You gotta be looking at your daily to hourly, but take your trades here using my double stochastic strategy on the 5-minute level. You can write these quick ups and downs quite sharply, entering on the 5-minute level and exiting also within half an hour view on the market. Anything can happen. The mineral deal is on the table between US and Ukraine. Tariffs are ongoing. It is very, very confusing, but as for day traders, intraday traders, it's all good in a way. Obviously, many of us are also investors, so you gotta look at the markets intraday differently than your investment portfolio. Yesterday was the darkest day in years on US stock markets. Hundreds of billions of dollars were lost in value in an instant. S&P fell yesterday 2.7%, and now it has corrected altogether about 7%. Nasdaq fell 4%. So people, know your key levels, stay intraday, be careful, be cautious out there. It's a good day to be on the markets, following the macroeconomic news and the technicals. Today is Tuesday, March 11th. Not so big in terms of economic calendar releases. Today will be much busier, but the news will be driving this market, so be careful, be cautious. And now that you're here, why don't you drop me a comment, leave me a like, hit that subscribe button, and I'll see you tomorrow on Wednesday.